Hi, welcome to Module 3.2, where we're going to talk about the account and account classifications. So we've seen a little bit about the account in our review of financial statements and financial reporting, but just want to talk a little bit more specifically about the account itself. So when we talk about an account, what we're really utilizing is a naming strategy that's going to sort of categorize information related to a specific asset, liability, revenue, expense, or shareholders' equity. This is where we track all the specific transactions based on that one specific item. And we call it an account. Each account has a name, and the naming conventions in accounting are fairly straightforward. Do not try to be too creative. Typically, we name an account based on what it's actually tracking. So if we're tracking an asset called cash, typically that means the money that we have available to us, the bank account. If we track a liability known as a bank loan, typically again it's categorizing or keeping track of the information related to a particular bank loan. And so each account has a specific name, and again typically those names are indicative of what type of asset, liability, or shareholders' equity item we're talking about or tracking. And we also have a balance associated with these accounts. So at a given point in time, we can add to those accounts, we can subtract to those account balances, and at the end of a period we can sort of understand what value each of these items has. Now all of these accounts, I should also mention, are financial accounts, so they all have financial transactions associated with them. And so we'll talk a bit more of that as we go forward into our next accounting cycle. So accounts are also classified. I think we talked about this again in one of our modules talking about our financial statements. We saw a glimpse of this. But again, in order to sort of help us to ensure that we have comparability across different companies and different years, we classify accounts based on their characteristics. So our classifications are typically assets, what we own. We can also further classify these as current or non-current. Okay, and current simply stating that we have an asset that's available for us. We can turn it into cash within 90 days. Non-current would be a longer-lived asset, an asset that's going to be around for a while. It's a little harder for us to turn into cash. So as we think about some of our different assets, we can think about cash. That would be considered a current asset because it's very easily spent. It's very liquid. Supplies, again, typically a current asset. We can very quickly sell supplies if we had to create cash. Equipment. Equipment is one of those things that could be current or it could be non-current depending on the type of equipment we're talking about. If it's very specialized equipment, there might not be a whole lot of people who would be willing to buy it from us. And so it might take us longer than 90 days to sort of turn that equipment into cash if we had to. Property, again, would be non-current. Typically it's a long-lived asset. We hold it for a long period of time. Prepaid expenses, typically a current one. This is basically an expense that we paid in advance. And so, for example, if we pay our rent for the next year, and we decide we need to cancel that, typically we can get a portion of that back, and so it's considered an asset, and it's considered a current asset because we can turn it back to cash typically within 90 days. And last but not least would be our accounts receivable. And again, accounts receivable are customers who owe us money. So typically we'll count them as current assets, meaning that we want our customers to pay us within 90 days. So we can turn those accounts receivable into cash. Okay. Next classification would be liabilities. And again, we have short-term or current liabilities and long-term liabilities. And again, based on over the next year, whether we need to pay them or whether they can be outstanding for longer than a year. And so our liabilities, again, are what we owe. And some of the examples of accounts within our liabilities would be accounts payable, which again typically is a current liability. We want to pay our suppliers within a year. A bank loan typically could be current or long-term depending on how long the loan is taken out. A note payable, again typically a longer term. Bond payable and mortgage, all longer term debts. Then we have account classifications under revenue. So again, what's been generated from operations. And typically the accounts that are utilized in revenue category would be sales, service revenue, or fees earned. Again, all of these classifications and the names that we use differ between industry and depending on the size of the organization. These are just some examples that we're using here. We can classify accounts as expenses, which is what we've paid to continue operations. So we pay salaries expense, supplies expense, our utilities, we have to pay taxes, rent, etc. Then we have common shares and dividends as two additional account classifications under shareholders' equity. Okay, so let's do a quick check here. Let's take a look at a few different accounts and categorize them under our different possible account classifications. So under cash would be under an asset. Service revenue, pretty clear one under revenue. Utilities, be classified as an expense. Prepaid expenses, classified as an asset. Depreciation, again, depreciation is the wear and tear on our assets over time. So we're going to use that as an expense. A truck would be considered a piece of equipment, an asset. Common shares, be under a shareholder's equity. Sales, again, would be revenue. Salaries expense, be under our expenses. And dividends would be a shareholder's equity account. So there's a few examples of classifications. Each of these individuals, cash, prepaid expenses, truck, are examples of accounts. So under each of those account classes, we would measure the value and record transactions related to those specific types of accounts. All right, thanks so much. That's it for lecture 3.2, and stay tuned for our next one. Take care.